All right, traders, let's go ahead and get started for today's recap. This is Christian from Tribeca Trade Group, and today is Thursday, July 15th, and a couple themes of the day, which we'll get to. Risk disclaimer first. Everything that we're going through here is for information purposes only, not giving out any advice or recommendations. Everything that we're doing here is for education purposes only. If the screen is a little bit blurry, just give it a little bit more time. YouTube does take a while to render their high definition videos. So what I send out first is just kind of their low definition blurry version. So just give it a little bit more time. So let's talk about the performance in the indices today, and a couple things that I'm watching that I think really need to be cleared up here. For me to kind of commit more risk to this market. If not, I do things like I did today, which was just kind of peel back some of that risk. I mean, I think it's, what we've been seeing the last 3 weeks is kind of just a continuous deterioration, not so much in in the price action, but really what we've been seeing. We've talked an awful lot about market breadth, advancing versus declining. This way we know what kind of environment we're in, whether it's an easier trading environment or more difficult, right? You've heard me talk about that the last couple of weeks, that it's been a more difficult environment to trade. So today's performance, yet S&P just down slightly for the day, 34 basis points. Qs, there's a little bit more damage there, and you have to put things in perspective that the Qs have been up a lot over the last few weeks. So taking a breather here, I think, is completely normal. This what troubles me too is that the small caps, right? So number one, the small caps are really not showing much of a bounce. I was looking for them to actually, have a little bit of an oversold bounce, but we're just not seeing much of confirmation that we're either, where we are in terms of the process of seeing this deterioration right now. We're not, I'm personally not seeing many signs that would say that this is getting better, right? And that's kind of what, even though we haven't really seen a market dip per se, but it feels like it in some areas of the market, especially in the small caps. So what I tend to try to do is look for some things to get better. One of which is that market breadth, which every day it's going from, like yesterday, for example, we opened up the day and things were advancing. We saw more advancers versus decliners, but we saw a deterioration over the day, right? And today it just kind of looked not great. All right, and here's the numbers in terms of what I'm referring to in terms of market breadth. The Dow did fine today, and the Dow was actually up today, which I didn't get a chance to talk about. But you had 16 advancers there, you had 14 decliners. The S&P wasn't all that bad. 239 advancing versus 266 declining. Here again is where you get into some trouble. The NASDAQ 1194 advancing, 1689 declining, right? And then if you start to look at the 4-week highs, right, the Dow, not the best, but okay. More 4-week, names that are showing more highs on the 4-week time frame than new lows. S&P is now even, right? So again, that breadth has been kind of skewing things a bit, and now we are seeing these lows start to pick up a little bit. NASDAQ is even more evident, right? So that is evidence of the deterioration. 29 new 4-week lows versus only 3 new week highs. So that is, kind of gives the illustration that I want to show is that it's a difficult market to trade right now if you're trading single stocks, right? When we look at 4-week new lows, there's not much, there's still, there's 7 52-week new highs. So that's a good thing out of the Dow. So let's talk about so before we get into some of those individual names, let me just take off the labels here on our MarketWebs indicator, just so that it doesn't cloud up the chart here. But yeah, we're kind of just coming in here a little bit. We've had this breakout, obviously, for now about about 3 weeks. We're into this breakout, and you could see that we're getting a little bit tired here. The level that I keep, the 1 hour chart is where I really come to find important levels in the short term, right? Because a lot of what I'm doing is short term, medium term, and a little bit of long term swing trading, right, in my trading account. So I need to watch short term levels, and I find those many times on the 1 hour chart, right? So when you look at this, we've managed to basically stay above value, which is the 43.50, and you could see that we've been kind of showing some deterioration, especially since the beginning of Wednesday. Things have been kind of going more downward than anything else. NASDAQ, right? So again, that level to watch is 43.50. If that level gets, if we start to kind of sink back below here, then the next area of support is going to be down at 43.07. Right? And we're talking about like 40 handles down. So, a significant amount to kind of be mindful of. Oops, NASDAQ, we can look at NASDAQ Futures, or if you want to look at the Qs, very similar. So this did break into value, right? The Qs have been stronger, but today they kind of succumbed to some pressure, as well as we started to see that towards the end of yesterday too, right? So again, you look at this chart and you're like, wow, there's not that much damage, and I agree, especially when you're looking at this massive run that we've been on, and even with the move today, let me just scale this back down, right? The RSI is just coming off super overbought levels, right? So it's a 62 RSI. All right, so that's what we've got going on here in the Qs. And then, the difficult one has been the small caps. Now, what has been going on with the small caps for the last few months is, going from one direction to the other, right? So we get to the one side of this channel, we manage to rally. It doesn't go too far. We start heading back down, and we find a footing here. Notice that we made a little bit of a higher low here, back in May, and then we made just about a new high. Actually, it says 234.53 was the new high. So again, it's been in a channel a little bit right now. If this kind of turns tomorrow, right, then you could say, hey, well, at least we've made a higher low than what we did, back in May, and where we kind of originated with this low back in March. So that would be positive. But it's still very tricky, considering that it's in a channel, back and forth, back and forth, back and forth. So that's kind of important, I think, to keep an eye on. We don't want to see a breakdown in the small caps. IWC micro caps, we could kind of the same thing going on there, but not as much of a pattern. Also, mid caps are something kind of interesting to watch too, because they're kind of in the middle, right? A few other charts of interest too is the RSP, right, which is the equally weighted ETF, right? That continues to show a little bit of divergence there too. So, so that's definitely some things to kind of keep an eye on. And 150 would be the level to watch in the RSP. Again, if this breaks down, you're really, now you're really messing with more things that are going down, that are going up, and that would add to the market, to what we've been seeing, which is more market weakness than market strength, given the breadth. All right, a couple. I wanted to get to a couple other concepts, but let me review the price action for the day in terms of sectors. The banks were actually the best today. Interesting too, because the bonds are, right. The bonds were up huge today. So the relationship, we've talked about this relationship with bonds. Sometimes there is a major relationship with bond yields and banks. Sometimes there isn't. Today is an example of that. Yields are lower, which is not generally good for banks, right? And you could see this bond futures, after being a little bit weak last week, has come back with a vengeance. But this is, I think, what's going on a little bit more. And one day is not a trend, even though KRE was up 1.2%. And XLF was also outperformed the market, up 30 basis points. I think what's going on here is there is more of a need for low volatility equities, and financials do represent that, right? The banks are slower moving. They're a little bit more value than they are, software names, big growth names, right? The growth stocks that are in ARKK, right? So I think that is what's going on here. Is you have more of a flight to lower volatility areas of the market, and I'm going to get to a couple of those charts in just a second. And then it even kind of hits, hammers that point home more when you look at some of the other outperformers for the day. Utilities were up 1.1%. The industrials were actually green today. They rallied a little bit from the open as well, and consumer staples, right? So again, these, when you classify some of these things, you could say value, you could say low volatility, you could classify them as a couple different ways. When we look at the names that underperformed, right? What was very disappointing to me, specifically because I put on a long semis trade, this is one of the worst performing groups of the day. So I was not expecting that out of Taiwan Semi today. Right, I was expecting, maybe a little bit of a pullback, and then the pullback to be bought. That's not what we saw today. I was looking for this Taiwan Semi, which is a big component of the semiconductor ETFs, to stop around 120. This went down another another $3. Right, so this was down 5.5%. So this is concern. This is another, this is another chip to put on the side of, like how I use chips like poker chips, but we're actually talking about semiconductors. It's another chip to put on the side of, that this is not what I want to see out of the market, right? And semiconductors breaking through value on multiple time frames. Again, they could come back tomorrow. They could be up 1% tomorrow, and I would feel a little bit better. I'd also feel a little bit better about the trade that I have on. But for now, like this is a failure, right? So just when they're supposed to lift and go higher, just as they kind of did in here too, they're showing it. They're showing issues, and that has me overall concerned. Right? Look at the volume too on the big red day, right? Well, we know we always get big volume on red days, but this is somewhat concerning to me. And to tell you the truth, it doesn't make a ton of sense to me. But the market doesn't always make perfect sense, right? All these issues with chip delays and so forth, you would think that this would be a very high in demand area, and I'm not fully understanding. To be honest, other than it's telling me that there's something wrong. To hear that so many of these chip names, which there's this big chip shortage, and to see that these names cannot get going, or they rally and then they stop. Other than a couple names like Nvidia and Marvell, not seeing the whole group, and an ASML as well, which broke out yesterday. Now just kind of came back and tested here. That'll be another name in the group to watch. But I really feel better, about this market when I see the semiconductors very strong. Again, that's just me. Everybody has their different things that they like to watch. Some people like to watch the transports, which also haven't been acting very well. Right, so you could say, because people have made that argument that the semiconductors are the new transports for Dow theory, but both of these are showing some issues. All right, so that's the story there. If we go back into my spreadsheet, what else didn't perform today? Solar didn't perform today. So here's kind of the issue, right? So value is outperforming growth. I think that's the second day in a row. If you look at the ARK funds, they underperformed for the day. Not as bad as yesterday, but we mentioned this ARK ETF got back below its 200-day moving average. If you want to be really optimistic, you could say, hey, maybe this is kind of carving out an inverted head and shoulders. But if you're going to make that case, this needs to stop and start to rebound and go back up again. So it'll be interesting to see how these things develop. The other thing that really complicates things right now is we just kicked off earnings season, so it's going to the earnings season. I think is always difficult time to swing trade. So I'll get to the conclusion here shortly about what I did today, but The other concept that I've been going over the last couple days, and I started actually this concept last week when I really noticed it, is that the low volatility equities are outperforming the high beta areas of the market, the high beta, right? So if we look at this chart, this show is to me is a little bit more interesting than the value versus growth concept, right? So this is a 3-year. I think I'm looking at a 3-year. We're looking at a 3-year chart here of low volatility versus high beta, right? So you can see that this has been basing, right? Now for a while, you know, basically since after the pandemic, we really started to see higher beta areas of the market. It's been more of a risk-on type market. There's been more growth areas that have been outperforming, the value and the lower volatility areas of the market. But we're starting to see this turn, for the first time. We saw a little bit of a move back here in the beginning of the year, but we're starting to see this take place again. So if you don't know what I'm talking about when I refer to low versus high beta areas of the market, what you could do is just bring up the components of the ETF. So there are things that that you're probably imagining, even if you don't know the actual names that are in the low volatility ETF. But it's a lot of consumer staples, Colgate, Pepsi. Then it's Procter and Gamble's also in there. Then you also have some healthcare companies in there like J&J. You have an Agilent in there, and I think I did actually go over this yesterday too. But Verizon's in there too, right? So you got a slower moving telecom. Costco, which Costco has been performing great, so not bad to have that name in there. A mondelez, and if you look to see how these things performed today on the daily chart, you would look and you would say, hey, today must have been a pretty good day. If you look at the mondelez, mondelez just broke out to a fresh new high, right? So if you covered up the symbol and you said, and I showed you some of these charts, you would say, hey, this doesn't look bad, right? Verizon is trying to break above here, right? Just to go over a couple other ones too. A Walmart is acting well right now too, even though that has some resistance. Still was up for the day. Versus if you go in and if you look at the SPHB, right? So high beta, right? You're going to see that there's some names that may have some crossover with the ARK funds, right? Tesla's in here, right? But Tesla's not that big of a weight. You can see it's a pretty diverse basket, by the way. The biggest weight is 1.5%. ENPH, right? That's a pretty volatile solar name, right? Solar also, does not look too pretty right now. Down another 2% after down. I think it was down 4% yesterday. So this is specifically, this is specifically higher beta. And by the way, look at that VPOC tag, and a great example of a version point of control being taken out and a reversal. So now we're into support for ENPH. So that may be one to watch if you like solar companies here. But you also have a bunch of energy companies in here too. Oxy, Marathon, Devon, which these names are also not doing very well right now. So it doesn't matter what energy, clean energy, dirty energy, right? Which is what I refer to. That's my little nickname that I have for, OIH and XOP. But take a look at this group, right? After making a high back at the end of May, beginning of June, right? This group has really suffered. No, hold of the 20-day moving average and bounce, right? These things, since they broke the 50-day moving average, which again is very important if you're a disciplined trader, once you break the 50-day moving average, it's, to me, it's kind of hands off, right? If you're in the camp of being like a shorter term, medium term swing trader, a 50-day moving average break means kind of get out. All right, so those are the themes that I see right now. Now, could these things change the way that this market has been changing? Of course, but that's the story right now on the tape, is that the Dow stocks and lower volatility areas of the market, your utilities, your consumer staples, things of that nature. Here's the bar for utilities, by the way, up 1.1%. Still kind of, to me, a difficult chart because you're going to have some resistance up here, right? But for today and yesterday, we are seeing those areas of the market outperform. Right, here's consumer staples, right, also making a nice little move. One other area of the market too I was watching was industrials, but again, they look also just too difficult, right? I know Honeywell did well today, which I own in the TTG Trend Portfolio. We made some changes there today as well, just to get a little bit more defensive. So, but almost out to new highs. So here's what I did today, guys. I took off. I'm very quick with some of the newer trades that I have on. A couple names that I got alerts on, like downside alerts in the first hour, and I said, you know what, these are not doing what I want them to do. So I got out of Medtronic. I had a small position on, and this actually looked okay today. This actually hung in there. But I could always, whenever I get out of a position, right, I'm worried about my risk, obviously, first. And I could always get back into some of these names. Right, I traded a little bit of IWM. Look how fast I was in IWM. Right, I'm just not messing around looking for like a big winner right now when you have the market doing what it's doing. Right, so if you look at the 5-minute, how did I trade this thing? Well, I was just looking for a bounce. I got that bounce on the open, and I sold right into here. Again, I wasn't trying to be greedy or anything like that, because look at what happened an hour later. Right, we returned back up here, but look at the bottom fall out. Right, and I think right now we're seeing more areas of the market do this than be successful to the upside. So when I see more charts do this very quick to the downside like this, it tells me that to make some of those adjustments that I've been talking about in the weekend video as well as in yesterday's video, holding less positions, smaller positions, trying to avoid short-term option risk, right? Because the market is moving a bit faster. All right, so that's that's me getting out of some exposure. I tried a little bit of a trade in Goldman. Same thing. As soon as that went back to my cost basis, so here's a good example. Nice move here, right? And I still like the Goldman chart, which is one. This is a name I talked about in yesterday's video. Right? Well, I pulled the trigger on this, but again, if you're not careful, right? If you're not monitoring these things, if you're not taking targets, even though they were a couple small targets I took. That's the environment that we have right now, is that things are just, they're moving, they're changing directions on a dime, very quick. Not even a little bit of a pullback like into the top of value and bounce. Nope, just complete give back all the gains. So the other word that I use a lot is tricky, right? So that's Goldman, out of Goldman, taking a couple targets like this. CSCO, which was a name I talked about yesterday, again, was showing red on my screen, out, right? I'm just not going to mess with things in this market right now. And it looks okay. It held in there by the end of the day, right? So it's a name I'll come back to, and I'll watch. But if it's not working, especially sometimes right off the bat, I'm really quick with taking some of these things off. Right? So, here's what I sent out to members. This was around 1 o'clock today. I said, I'm playing more defense here. Tape just gets harder to trade. So I'm not fighting, and this is kind of the conclusion of the video. I'm not fighting it. And when and I spoke specifically about this for a while in yesterday's video, and you can replay that if you didn't hear yesterday's video. But if the tape gets harder and harder, it's not so much about your skill level. It's just you're dealing in a much more difficult environment. Right. So again, it has nothing to do with, don't mess with ego here and, who's the better trader, this person or that person. That may be the case, that there may be some better traders out there. But right now, you're dealing with a very difficult environment. Right. And, so I think right now playing defense is the best thing here. Right. I play a little bit more offense. I'm more on the offense side of the ball when we've got a really good market environment, right? When we see that expansion of breadth, when we see a lot of participation. We haven't been seeing that now for about 3 weeks. So, the defense game is important right now. All right. Another name too, like to talk about a few other names in this low volatility environment. I actually wasn't meaning to take a target here in AWK, but this is another boring name, right? So I try to stay positioned in some of these things, right? This is American Waterworks, right? And this thing is, kind of breaking out a little bit here, right? I'm in waste management too, which really hasn't been doing anything. It actually did break out today, right? I did not take a target in that one. I think I've got a target up at 147 in waste management. And then the last one to cover, right? Last chart, which is Home Depot. So again, I might be pushing the envelope here a little bit because when we go over to the 1 hour chart, it's at the top of value and it's gotten to this place a couple times and it's kind of turned back the other way and hasn't been able to break out. But at this point, I think it kind of fits the mode right now of a little bit. I'm not sure if Home Depot is in that ETF, the lower volatility ETF, but I do like the consolidation, and it just has to break above 323, and I think I'm in good shape in this trade. So it's close. All right, guys, thanks for watching. Have a great night, and see you tomorrow.